Hi, this is Charlie giving you Wednesday's video. I'm recording this about 5:30 Wednesday evening. And as a follow-up to last Wednesday's video where I talked about the potential for an upcoming crash or mini crash or correction, well, we certainly got that, didn't we? So those figures that I put out last week from Bank of America were spot on, and so we've had a lovely move down, obviously, in the S&P and the Dow. Let's actually change this to the Dow, actually. Um, and so we've had this wonderful move down, but quite often people immediately, as soon as you've had the move down, people are saying, well, should I buy? And so what do you do? What can you do? Is there a way of knowing when you get these big, very sharp flushes down like this? Is there a way of predicting when the market's about to do a bounce? And there is a way, actually, and so I'm going to show you in today's video how you can go about seeing when a market is very much short-term oversold and that it's due a bounce. And we do that by using breadth indicators. So what we're going to do is have a look at these breadth indicators and see what they can tell us. So let's first of all go to the McClellan oscillator, an old favorite of mine. And I'll tell you, I used to use these a lot. When I used to trade stock market indices a lot, I used to trade 70% of my stock index of my trading up until about 2010 was trading the S&P. The 30% remaining was probably mostly FX and a bit of gold. And people often say to me, why you don't trade stock indices anymore? I'll tell you why in a moment, why I don't trade them as much as I used to. Partly down to habit, because I ended up trading FX more. But there's a reason why I got into the habit of trading FX more. But anyway, first of all, let's have a look at these indicators here. So the McClellan oscillator, it's an old, it's been around for years now. I used to use this. It tells us, basically, it's telling me when the market is short-term overbought or short-term oversold. I tend to use it basically. If the McClellan oscillator gets below -200, then it tells me the market is short-term oversold. What the McClellan oscillator does, it looks at the advancing stocks versus the declining stocks on the New York Stock Exchange, and it plots two moving averages of each, and that's what gives us the readings. And so the point with it is it gives us this information when we're short-term oversold. So as we saw a couple of days ago, the McClellan oscillator closed below -200. It's the first time it's closed below -200 in quite some time. If I zoom right out, you can see it hasn't been below 200 in a long time, not since 2016, maybe 2015, in fact. That's because of the volatility we have, or lack of volatility we've had in the stock market indices. Yet back in the day, in the financial crisis, the McClellan oscillator was going off -200s all of the time, or below -200s. So that was the first thing, because I put out to our traders in our trading room and on our swing trading app, the market was due a bounce and should bounce yesterday, which obviously we got the bounce yesterday, and obviously then we've got a follow through today. So that was one indicator. The other indicator is the TRIN index. So if I bring up the TRIN index, it's the short-term trade index, or the ARMS index, as some people call it. And again, it gives us it gives me an idea of when a market's getting again very short-term oversold, and a TRIN index reading of +2 or above. These were always the readings that I used. +2 or above tells me that we're short-term oversold and that we're due a bounce. Now that happened again a couple of days ago, so we see that on this day here the TRIN was well above 2, actually closed at 3.5. And then if I go back to what the stock indexes did, if I can bring up the charts again, then that was 2 days ago. So when we had this big plunge here, we were desperately oversold, even though overnight we came lower. Overnight, during the night, going into yesterday, yesterday is what, Tuesday, the market was very much oversaturated and oversold on the short side. So if you're interested in that sort of stuff, the breadth indicators, and certainly I used to use breadth indicators a lot when I was intraday trading the stock market indices, like I'd use the tick index a lot. They're very useful to give us a short-term gauge of when a market's overbought, oversold. So there you go. That's how I went about leaning towards the bounce side on these indices 2 days ago because of those breadth readings. Now we've had this nice bounce. What happens next? I must admit, we've now come up into some of my key moving averages here on the Dow. If we go back to the S&P as well, we've come back up into those key moving averages on the S&P. I think we've had a nice bounce. And we're probably due a bit of backing and filling. So as I'm writing this, we're probably due a bit of backing and filling. Maybe going into tomorrow, we come back off again. So we shall see if we come back down within this bar here. I don't necessarily know whether this correction is entirely over yet or not. Certainly we have the potential to come back up and retest the highs, but that could take a month or two. What could happen is the market could just go slow and start trading within this big candle we've had here, and it could end up just going a bit slow for a while before gradually then picking up. I do see the potential for obviously for more overall downside, but there's also an argument. We've had what we call extreme readings up here on the higher time frames, like monthly charts. So there is that potential that the market might want to still go up here again. But what this was is it's a 10% plus correction. It's made the news, and everyone's worried about the fact that we've had this correction now, and yet reality, put it into context, take this out to monthly chart. Yes, it's a nice big bar here, but in relative terms, relative to the last year or 2 years, whatever, it's just a correction. It's just happened very quickly. But we shall see if we have another leg down to break new new lows at some point or not. I'm not in the business of trying to bother projecting where that may happen or when that may happen, but I can certainly see the potential right now and in the next maybe day or two, the potential for a bit of backing and filling, because we've got pressure coming down on top of the markets at the moment. But then I'd like to see if it stabilizes and then starts to creep back up. That's how I'd look at it at the moment. And then after that, then we'd then look for another leg down. As far as the my personal trading, so why do I trade FX a lot more nowadays? Basically, I got booted out of of the spread bet firm that I was trading with at the time. Years ago, back in 2009 or so, we had all this huge volatility. A lot of you know this story. A lot of you who were in our trading room, live trading room at that point, know this story, because this is what happened. I was trading on a spread bet firm. I think it wasn't a huge amount, but I took about I think it was the final straw was I took about 30,000 off them in about 2 weeks, and it was all short, very quick trading, in and out. Some of the trades I'd be in and out in a minute, 2 minutes, and spread bettors don't like it when you're scalping like that. But the markets were moving so much, in a minute or two, the S&P could be moving, or the Dow could be moving 50 points, 100 points. So you're banking your profits, and they didn't like it. And so in the end, long story short, I politely thought, okay, well, I might as well leave. And they were okay with me. They're very nice and polite about it, but they just couldn't handle the type of trading that I was doing at that point. But it was just reflective of the market. So then I moved the bulk of my funds across to Saxo, who you see when I'm doing live trading with, and they really specialised more in FX. So as a result, although I can trade obviously futures and the likes, I felt that they were more of a specialist in FX, and that's how I came to just thinking, well, I'll just trade more FX here because they're very good at this, and that's the story behind that. So there you go. The stock market indices, little story there for you. And next week I'll give you an update on the impending course that we've got coming up on the 10th and 11th of March. And so I'll give you some. I know Sam's been sending some information out to you, but I know we're still a way out yet, over a month away yet. But bit by bit, we have to get information out to you on that. I shall see you in 2 days' time on Friday morning. Take care for now.